Hello everyone, it's Dale here with a daily levels commentary for the 27th of April 2018. Let me first say hello to the new guys who joined us after yesterday's webinar. So hello guys, welcome to the course. Let's first have a look at the euro dollar, because there is a new short level that I like to trade. It's pretty near, it's right there, and it's based on the volume accumulation setup from the setup number 1 from the webinar. You can see that there was pretty long sideways price action right there, right before the start of this renewed selling activity, and for that reason I'm looking for significant volumes within this area to go short from. As you can see from the volume profile, the most significant volumes were right there, so I'm waiting for pullback to this area and I'll go short from there. If you look at yesterday's development, there was a pretty strong rejection of higher prices followed by a really strong sell-off. The market closed at the daily low, which is a strong signal of strong sellers. Also the rejection of higher prices and the selling activities, sign of strong sellers, and for that reason I'm really short biased on the euro right now. So I'm only interested in taking short trades because I think that right now a strong downtrend on the euro started. I was also looking into this area for possible short levels, but I don't really see any intraday levels that I would like to trade in this area. There could be possible swing trade from this area, from the place where the volumes were the heaviest in this area. After that, there was selling activity and buying activity during the macroeconomic news yesterday, during the ECB press conference, and then the strong selling activity started. So this information is a little bit hard to read to place intraday level there, but it's good enough for a swing trade with stop loss, let's say somewhere above this high. So going short from this area may really be a good idea. Would basically be the volume accumulation setup combined with the rejection setup. Let me also show you the daily chart of euro dollar. There is this sideways price action, this rotation I was talking about in yesterday's video, and you can see that actually the price broke the range, and yesterday it closed with this very negative candle below this low. So this is very strong sign of aggressive sellers, and I think that strong sellers were accumulating their selling positions throughout this 4-month sideways price action. So I think that really heavy volumes got accumulated during this area, and for that reason I think that the trend that started right now will be pretty strong and it will prevail for a long time. So I think that right now there is a start of downtrend, and I think that we can actually bank over 1000 pips from this downtrend. We just need to be patient. It doesn't mean that there won't be pullbacks. Actually, I think that there will be pullbacks to the point of control. This is a D-shaped profile in this area. Rotation usually have D-shaped profiles with a point of control somewhere in the middle. So I actually think that there could be a pullback to the point of control and then renewed selling activity. This is one of the scenarios that we can see on the euro, but we need to be patient and hold to the positions. There's also positive swap, so no need to hurry. I'm myself holding a short position from this area. Right now I'm plus 400 pips, and the target is over 1000 pips, so there's a long way to go for me. Alright, so this is for the euro, and let's look at the Australian dollar, US dollar. There's no new short level that I like to trade, only the old one is based on the volume accumulation setup, is based on the heaviest volumes accumulated within this rotation right before the start of this sell-off. This is basically the weekly point of control, which is pretty strong level to go short from. So right now I'm waiting price to return back to this area and go short from there. There is also one level that I was considering pretty hard, and it is this short level. The final verdict is that I won't be trading it, and the reason is that if you look at this rejection, the volumes are the heaviest right there. But if you look at this whole area, if you approach it as a volume accumulation setup, and if you look at futures, then the heaviest volumes are somewhere right there. So I'm not really sure where to place the level, and maybe I'm just too much conservative about this trade, but I don't really feel like taking it. So I'd rather be careful about the trades that I'm not 100% sure of. So for that reason I won't be taking it. If you feel like you're more aggressive in your trading, you can take the level, it's not that bad. It's 75.79 if you look at Forex data, but I probably won't be taking this level. One more thing I need to mention concerning the Australian dollar US dollar. We are in strong downtrend, and for that reason I'm only looking for short trades, so absolutely no longs until there is a daily shaped profile with a shape of the letter P, which is a P-shaped profile. This would be a first sign of strong buyers, but obviously there isn't such a thing now, so it's short trades only. Let's go into the US dollar, Canadian dollar. Let's have a look at the short level we had there yesterday. I discarded the level when the price turned 2 pips before the level. Then, as you can see, there was a second test, and if you were able to take the trade, I'm not sure if the price actually touched the level and the spread would allow you to enter the trade, because it was at the daily close where the spreads are usually wider. But if you were able to take the trade, it would be a profit. But as you know, I'm not trading second test, so I didn't take this one. Also, one other thing to mention is this long level, which got tested several times, so I discarded the level. If you took it with the limit order, again it would be a winning trade, but this level was definitely over tested, and also pretty weak low got created. This is the weak low, which got ultimately tested, as you can see there. So I think it was a good decision not to take the trade. It would be too risky to take it, I think. It would be a profit, but it would be a risky trade. As far as current levels are concerned, there is one new long level that I like to trade. It's based on volume accumulation in this area. You can see that pretty heavy volumes got accumulated right there. And after that, strong buying activity started in yesterday's US session. So this indicates that those volumes were volumes of strong buyers who were adding to their buying positions there and finally pushing the price upwards. So right now I'm waiting for pullback to this area and I'll go long from there. The second long level I have on the US dollar Canadian dollar is right there. It's older one. Just to show the new guys the reasoning behind the level. This is the setup number 2, the trend setup. This is the trend. This is the significant volume cluster within the trend. So I'm waiting for pullback to this area, and when the price comes back, those strong buyers who are pushing the price upwards and adding to their buying positions there will probably defend their buying positions and they'll push the price upwards again from this area. This is the trend setup I showed you in yesterday's webinar. Let's have a look at the US dollar Japanese yen. There aren't any new levels, the market is moving in sideways price action. I'm still waiting for some strong selling activity because I still think that we are at a strong daily resistance and the price should fall down. The only level in the immediate area is this old long level. It's based on the trend setup, on the heavy volumes accumulated within the trend. Those are the heavy volumes. So when the price goes back to this area, I'll go long from there. This is the only level in the immediate area that I like to trade on the Japanese yen. I got a very good question in the forum about two levels on the Japanese yen. So let me go back to those questions and let me answer them. Let me just switch to the futures of the Japanese yen. Futures of Japanese yen is reverse chart. The correlation is almost minus 100%. So the chart is the same as US dollar Japanese yen, it's only reversed. The two levels that I would like to comment on is this one and this one. And I want to show you why I didn't list those short levels as the valid levels in the table I publish, why I won't be trading those two levels. The reason why I won't be taking the first level is if you look at the profile within the area, within the rejection area, you can see that there are actually three places where the short level could be. So it's not very clear cut where to place the level. So this is the first reason. The second reason is that I prefer to take the trades according to the third setup somewhere in the rejection area, which is, I would say, somewhere around there. So the level that you suggested was this one, but I prefer to take the trades closer to the top of the rejection. So if there was, for example, strong volume cluster right there, and there weren't those strong volume clusters, if this was the sole one created somewhere in this area, I would be interested in taking the trade. But in this case, I won't take it. And let's have a look at the second trade at the second level that I would like to comment on. It's this one. If you look at Forex data, it's a long level, but on futures it's a short level. And the idea behind this level should be a volume cluster created within strong downtrend. As you may have noticed, I have a short level right there from this volume cluster, but I don't have a short level from this volume cluster. What is the difference if you look at this one and this one? Well, the higher one, the one I selected, had a sideways price action, rejection of higher prices, and this start of selling activity. What matters the most is the sideways price action. If the price just travels fast in one direction and it makes the volume cluster within the fast movement, I don't really like to take trades like that if there isn't some other confirmation of that level. For example, if there was a support becoming resistance setup and such a volume cluster like this one, that would really be a good trade. Actually, I had a trade like that a few days ago, but in this case the only thing that I can see is the volume cluster and nothing else. So for that reason I decided not to take the level. I was thinking really hard about this trade, to be honest with you, and I think that there is a big chance that the price will make a reaction to it. So if you feel like more aggressive, or if you like the level, or if you have any other confirmation maybe from some other strategy you're using, then you can take the trade, but I'll be more careful with this one, and I wait for the price to come to this one and I'll take the higher one. Alright guys, so that's it for today. Have a great weekend. I'll be looking forward to seeing you on Monday in the daily video, and until then I wish you happy trading.